Have you ever felt like the stock market is a giant game where everyone else knows the rules? Like you're constantly missing out on those big winning trades? Well, what if I told you there's a way to learn from the moves of the market's biggest players, the ones with the most money and information? That's the power of smart money trading. By understanding how these whales influence the market, you can gain valuable insights and potentially improve your own trading strategy. In this video, we'll crack the code on smart money concepts and show you how to use them to identify profitable trading opportunities. So buckle up, because we're about to level up your trading knowledge and maybe even change the way you see the market forever. Imagine the stock market as a giant tug-of-war, with professional investors like hedge funds and big banks on one side. These guys hold a lot of sway, moving the market with their massive trades. Smart money trading is all about understanding how these big players think and act. By analyzing their moves, we can potentially predict where the market might head next. This is important for regular traders because it allows us to see beyond the noise and confusion. We can learn to identify areas where the smart money is accumulating shares, hinting at a potential price rise. By following these clues, we can make more informed trading decisions and potentially improve our chances of success in the market. It's not a magic bullet, but smart money concepts can be a valuable tool in any trader's arsenal. In the world of investing, there's a term thrown around called smart money. It might sound fancy, but it simply refers to the big players in the market. These are the institutions with deep pockets, like hedge funds, pension funds, and investment banks. Imagine them as financial whales, constantly moving the water, or in this case, the stock prices with their giant trades. Why are they called smart money? Because these professionals have teams of analysts, mountains of data, and years of experience under their belts. They're constantly trying to predict where the market is headed and make profitable bets. By understanding how these big players move, we can potentially learn from their insights and improve our own trading strategies. Picture a tug-of-war between two teams, the bulls' optimistic investors and the bears' pessimistic investors. Now, imagine one side gets a massive boost because a bunch of weightlifters join their team. That's essentially what smart money can do to the market. Hedge funds and big banks have enormous amounts of capital. When they decide to buy a stock, they can inject a huge amount of money into it. This sudden surge in demand can push the price up, attracting even more buyers and driving the price further. It's a snowball effect, all triggered by the smart money's initial move. The same logic applies when they sell. If a big investor decides to unload a large chunk of shares, it can flood the market with sellers, pushing the price down. This can trigger panic selling from other investors, further amplifying the price drop. By controlling such large amounts of capital, smart money can significantly influence the direction of the market. Imagine a garage sale where some people might not know the true value of the items they're selling. A savvy shopper might snag a rare painting for a steal. The stock market can be similar sometimes. This is called market inefficiency. It means prices don't always perfectly reflect a stock's true value. So, how does this create opportunities? Well, if a stock is undervalued, priced too low, smart money traders might swoop in and buy it up. They believe the price will eventually rise to reflect the stock's true worth, allowing them to sell for a profit. By understanding market inefficiencies and how smart money behaves, regular investors can potentially identify these undervalued opportunities and potentially profit alongside the big players. Now we'll dive into the toolbox smart money uses. The first tool is understanding market structure. Imagine a beach with waves. The high points where the waves crash are resistance zones, areas where the price has struggled to climb higher. Conversely, the low points where the waves recede are support zones, areas where the price has bounced back up. By identifying these zones, we can see where the market might face buying or selling pressure. Next, let's talk about order flow. This is like watching footprints in the sand. They tell you where people have been walking, buying, or selling. We can use concepts like order blocks, areas of concentrated buying or selling activity, to gauge the underlying sentiment. Similarly, fair value gaps are price jumps that might indicate a sudden imbalance between buyers and sellers. These clues help us understand where the smart money might be placing their bets. Finally, there's price action. Price movements themselves can speak volumes. Imagine a determined buyer pushing a beach ball underwater a pin bar. This might suggest they were strong but ultimately couldn't push the price through resistance. Conversely, a price movement that completely engulfs the previous day's trading range, an engulfing pattern, could signal strong buying or selling pressure. By understanding these price patterns, we can decode the market's conversation and potentially anticipate future moves. Remember, these are just a few key concepts. In the following sections, we'll explore how to use them together to identify trading opportunities alongside the smart money. Alright traders, let's put on our detective hats and use these concepts to spot potential opportunities. Imagine a stock chart. It tells a story if you know how to read it. First, we look at market structure. If the price has been bouncing off a support zone repeatedly, it suggests buying interest might be strong there. This could be a good entry point, especially if we see bullish price action like a pin bar failing to break below support. Now, let's factor in order flow. Is there a clear order block at that support zone? This indicates previous buying activity, potentially by smart money. These clues combined paint a bullish picture, suggesting the price might be ready to rise.